All right, hey everybody, DayTraderRockStar here, and a big shout out to everyone. This is a special video going out on a Thursday because I will be not in tomorrow. We're going to have a special guest trader in tomorrow. Charlie Prolong Wealth will be manning the mic and taking over the trading duties. So give him some support. Show up tomorrow, and let's. I will be just going away for just a couple of days over the weekend, and I will be back Monday, but I won't be back Monday for the market session. I'll be coming back later Monday, so I'll be in the markets on Tuesday morning. I'll be back at the helm, but I wanted to get this out, kind of a early version of the HPS watch list, and market radar, and go over some stuff for you to prepare you for next week. When I get back next week, again, we go into prep mode. I'll probably end up sending some videos out Monday evening or Tuesday evening. And Tuesday, usually I do a show for you at night. So we got a lot of catching up to do on that. But I don't think it's a bad time to take a little time off considering these market conditions. So that's the first thing we're going to talk about. We're going to take a look at the markets today. Crazy day today. I mean, really choppy. Real choppy. Big difference from yesterday. Yesterday was Wednesday, and we had a sell-off of tremendous proportions. I mean, it was talked about, and a lot of people were really concerned about the market getting a follow-through. And sure enough, we didn't really get follow-through, but we got this sideways consolidation. And, I would say the majority, the consensus out there, the talking heads, the experts, the gurus, and everyone else out there, I think is betting on this market to go down a little bit further before we start to see some real upside, or feel safe, kind of real safe to get back into the markets and feel good about the markets. We do have some of that, and I have to kind of agree with that, And today's action kind of leads me to believe that this was just a consolidation type of day, and there is a good shot that we're going to follow through to the downside. Now, tomorrow's options expiration. Options expirations can always add a little twist to the markets. So I'm not guaranteeing a follow through to the downside. Actually, we could actually see this thing rip to the upside. If we take a look at the futures right now, if I take a look at I actually have the futures up right here, and they're up 1250, and they're trading at the highs of the session. So we could actually see a nice little move tomorrow. I'm not, but let's break down. Let's go back to the S&P 500 here, what we're looking at. All right, at this point, I want to show you my projections on the market. I want to show you my charts. I want to show you some great technical analysis of what's going on and give you some targets and areas that I'm looking for. There is a lot of talk of this market going lower. It's hard not to buy into that a bit, but you got to be careful, because when you have too many people calling for a directional move one direction or another, the market loves to counter that and make those people wrong. So the one thing we are feeling that vibe, that call, much lower levels on the S&P are around the corner. That's the only cautious thing I see here. I do believe there is some downside coming. I want to be very cautious. We've been very cautious in our picking up some longs at this point. We've been really short term, and that's been working out good. We'll discuss that in a bit. But I want to really break down and give you the updated chart here, kind of break down this whole move, going all the way back to the coronavirus correction, the sell-off, the panic, the bottom here, the sell-off, everything about this, So here we had the spring of 2020, we had the coronavirus, and then all of a sudden we had this huge move. Now, what happens? Scratch your head saying, how could this market be? How could the world basically be shut down? You're in your houses, you're not buying anything, you're not going anywhere, but yet the market and the companies and the earnings, the market just explodes higher in a way that at one point it starts gaining momentum. The FOMO crowd is in at this point, and it starts to become a bubble. Having a healthy market, you're going to stay at a trajectory in the markets, a normal angle of the market. So we've been kind of just riding this up. And I have this red line up here because you can actually see, other than here, which we kind of blew out of this and then pulled back and then retested it. When you have a trend line, you want to have those trend lines confirmed on multiple tests, but you also want to have tests on the underside and on top of it. What I mean is, if you break through it, come back, and then come back and test it, like we did way back here. I'm going to see if I can move out a little so you can see that a little cleaner. Let's see here. I don't want to mess up my charts here, but yeah, it's going to be hard to zoom out. I think I'm already zoomed out pretty far here. There we go. There we go. All right, sorry about that. So we could go back. You can see we kind of exploded through here, and then we kind of pulled back. This is on the weekly. If we look at the daily, and I'll keep it on the weekly for now because it gives us a better angle. And we can see these arrows. We touched it here, pulled back, and then we got up here, and then we had the correction, the coronavirus correction, and then we pushed back up. And then we really started taking off in the beginning of 2021. In 2021, this excess here, this is the normal trajectory of the market, and this should have been a healthy environment if we continue to just stay on that path, pulling back, moving up, stepping up. But what happened is, with the world shut down, stimulus, checks being handed out, a lot of liquidity in the market, the Fed really supporting the market, very market-friendly environments, and I have to believe that it was a lot of FOMO, a lot of, just a lot of people getting involved in the markets. We had so many things, the meme stocks, we'd had cryptos, all kinds of coins coming out, NFTs, just stuff that we've, it was, I'm not even going to go into it. That's a different story, but talking about technical analysis here. This was a lot of excess, and all those things caused this market to kind of get to a point where eventually we got to, let me go back on the daily now, we got to a point where the market kind of blew off here. At this point, a lot of excess came into the market. We had the return of the coronavirus. There's a lot of other things that started happening with over in Europe, especially the Ukraine-Russian war, the bottlenecks, what do you call it? The supply chain disruptions, the chip shortages, a lot of things hit the market at this time, and technically speaking, we had this line that went out, and I started this line at the beginning or the closing price because, again, at the coronavirus crash, I wanted to really point out that we don't usually use the extensions on these candles because usually, especially in a crash or a big correction, we usually overshoot levels, and we want to, kind of take an average or at least the closing price of that level. So I put it at the kind of the closing price of the corona crash, and we tested it here. And then once we tested it here, we really confirmed that we had a good trend line in. And then we tested it again, and then we started chopping around, and eventually we broke through it. Now, that breaking through of it is very important. So what we want to do at that point is remember that. So I want to put a line here, and we had a line there once before, but I want to just put that line there because I want to show you something important about that. It's a good line there, and we're going to make that a very important line. So I want to edit that line. I want to make that line red, and I want to make it a little thicker so we could see it. So that was a kind of an important level. That's the level we broke down through. Now, once we broke down to a channel trend here, we sold off hard and we bounced. And now, whenever we have an upward trend or an upward channel, and this could be a channel if you take us and drag it up here, very easy to do that. But I'm not really worried about the upside channel on this. I'm more worried about this underlying channel line. So I just keep in that lower channel line. When we have that, we tend to look at the lows before that. So you have the top pivot, and the pivot is whenever the market changes direction. So going from one direction to another. Here's a pivot, 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 here's a pivot. So here's our major pivot. It's the high. Highs and lows are major pivots. And usually the lows right before, the higher lows before that are important too. In this case, once you have what I call a 1, 2, 3 pattern, we teach a lot here at Day Trader Radio, it's the beginning of a channel. You need 3 pivots, 1, 2, 3. Then you could put in 2 lines, make 2 points, make a straight line. So you can put in that underlying trend line here. And again, we want to take an average. We don't want to really take these, you can see these candles are coming down and chopping. So I'm really just taking the closing price here and just extend that out. And then you drag a parallel line and you put it right at the top there. All right. So now you have the beginnings of a channel early on. And then for whatever reason, the market went through its process here. And there was some news going on, but we started to sell off here aggressively. And things got bad. We had this huge reversal candle. And we came down to that trend line. We shot through it and then closed higher off it. This was a daily chart. So this trend line seemed to be playing out pretty good. So we're going to move out a little, huh? And then we came back and retested. And you can see a kind of a wedge pattern here playing out, kind of a double bottom, some things that sometimes we like to look for. The double bottom here, the relative double bottom, the higher stochastic divergence here, the choppiness, and eventually we got a big rip. And this rip brought us, look where it brought us back up to. This is so great about charting. Once we broke down from our major trend line, the major trend, the whole bubble trend, everything about this market was riding on this blue line. Once we broke through that, that was what we call the scene of the crime. Scene of the crime was something drastic happens in the market. It could be news, it could be something, anything. Well, this was kind of the scene of the crime here. So we put that line in there, remember that line, and look at what happened. The market came all the way back up and tagged the level we broke down from. That's the scene of the crime. Amazing, right? So we continue on. Market here pulls back. And we kind of consolidate here, and then we start to really sell off hard. And I'm just going to finish out, and we come down, and this is basically where we are now. So when we broke through this level, even though we had a pivot here in a 1, 2, 3 pattern, that's okay. We broke through this. This was an interesting level because it was the scene of the crime, and we kind of blew through there, and we kind of gapped up here, and then that was the reverse. Then we reversed down to it, and look how we came back to that trend line, bounced off of it. Came back to it again, chopped around, broke down, came back up to it, kind of held it, kind of consolidated in this 44 to 4,500 level, and then eventually sold off. And that sell-off here, big days, big down days, big down days. I mean, these were devastating days, and it was on both sides of the market. You had some upside, downside, big
markets, and the market continued to sell off, and we came right back down to our 1, 2, 3 pattern. Now I have this blue line coming down. It was the top of the wedge. I'm keeping it in there just in case. So we're going to zoom out here, and this trajectory of the markets here. See how we tagged it here. We tagged it here, and then we kind of blew through it. But then we came back and tested it here, and then ran up to it. And this would be the normal, trail of the markets if we were just continuing, and we actually came down to it. Now, there was severe selling in the market, so we kind of blew right through that. But what happened is we bounced and we came right back up to it. So it's amazing that we actually stopped right on that line. I should put a blue arrow there because it is, charting and technical analysis is amazing to see these trend lines levels. So now we have a lot of things on this chart to really work with. At this point, market's selling off hard. I want to start looking at where our targets are to the downside. I'm not saying that this channel is going to hold up. We're going to push back up. I'm not saying it's going to break down or anything, but I want to be prepared, and I want to give you my projections of where I think we're going to go. So right now, basically, we hear about basic corrections, 10%. Well, 10% corrections out the window. All right, we're working on 20% correction right now, and the S&P, and I'm using the S&P. The Nasdaq is even much better, but for this video, we're going to be concentrating on the S&P. Everything's going to be relative. I'm sure once the S&P bottoms, the Nasdaq's going to bottom, and everything's going to kind of bottom. It's just that the Nasdaq has gotten hit more because they had more of those fluffy, weird stocks that really just got punished. Spotify's, the Pelotons, just kind of, just a disaster in those. So we have a 20% correction right underneath us. And underneath that, I put the calculations in. So let's make that line a little bit thicker. So, because that's an important level. But how important is it? It seems a little obvious, 20%. All right. That's okay. I heard today a study, and I do a lot of studies in the market. I do a lot of research and back testing. I heard today on an analyst on CNBC driving home, and they were discussing recession, when we go into recessions, and what the mean or the average pullback is in a recession. Now, I don't know where the data comes from, but she mentioned a 25% correction is usually average in a recession. Now, again, I don't know where that data comes from, but I remembered it in my head, and I said, well, I want to mark that off. I want to look at it and see where it is when I go home on the chart. So I measured it out for you, and that brings us down to that 3603 level. That's the 25% correction level. We're almost at the 20% correction. 25% correction brings us down to 36. It's another 300 points down. And I take that from the high, and I bring it all the way down. And you can see over in the upper left-hand corner there, that red line on the bottom, 24, 25. It's right around that 25% area. It's right where we have it right there. So that 36, right around that 3,600 level. And again, with charting, you hear me say it all the time, horseshoes and hand grenades. It has to be close. It doesn't have to be exact, but we're going to be around that level. We could actually flush through it lots of times, spike through it, which is fine. Now, the next interesting level, right next to this 25% correction area in the markets, is a 50% Fibonacci retracement of the coronavirus low, all the way from the low. And this could be off just a little because I did try to take a closing price average on that. Sometimes, like I said, but this could go down a little bit further. Problem with this chart, I could never figure out where my where I could grab this. Let me see. It's hard to adjust my Fibonacci's. That's why I don't put them on here, because I don't know. Yeah, I don't know how to grab them there. But that could be down a little bit further, but not too much. I mean, basically, your Fibonacci retracement is going to be right around that 3,600 level. So both the 50% retracement of this whole move from April, May, June lows, coronavirus 2020 lows, all the way to the highs, and if we give back half of that, that brings us back to a 50% retracement. It brings us back to the 3,600 level. Now look at this. That 3,600 level, we go across here, brings us right to the past trajectory of the markets. If the market stayed on the same trajectory path and was just kind of a healthy market, we'd actually be right at this level. This is exactly where we broke out. See that? This is where we actually started to get the excess in the market and start to form that bubble. This started, we get that blister in the market. This is fine, but all of a sudden it starts to swell here. And now you have this big blister. Came back down to that level, but now we're back down. If we get back down to that 50% level, that brings us right back down to where basically we broke out of that, that we started to create that bubble. Isn't that amazing? That area right here, 3,600, is basically where we started to break out and move away from the standard move here. So this level, the 50% retracement, the 25% correction area, the combination of those two look very appetizing. The 20% correction, I don't think it's going to be that big of a deal. I think we can get down there. But for whatever reason, we end up getting closer to this 25% correction area. I think we're getting very close to starting to nibble on longs here. Now you might have longs. I have longs. I'm underwater in them. I haven't been adding to them. I added two actually. I actually started adding to a couple, and I actually started getting into some new ones. I'll talk about those in a second. But I'm pretty much sitting on my hands and trying to raise some cash. I think at this point, As we get closer and closer to this 25% correction area, you have to raise some cash. Do not be the person out there saying, I wish I could invest in this market at this point, but I can't because I got blown out. Even if you got blown out, you're going to have an opportunity in this market to make some money at this level. So I don't know what you have to do, but I think you got to start raising some cash and getting ready to put it to work, because you're going to have an opportunity if we get down here, probably. And this would also be, would kind of fit my theory of capitulation. When we have a nice channel like this and we break down out of a channel quickly, that's a capitulationary move. It doesn't have to be a standard capitulation on volume and stuff, but I do like when we break down out of a falling channel like this. I study these all the time. I trade channels all the time. The move would come down, and then we'd move right back up to the underlying channel line, eventually get back above it, and then start to trade. Talk about it all the time. People who've been traded with me, we see it all the time. We see it on daily charts, on individual stocks. I could probably show them to you. So we're going to watch for some type of correction down to the 25% area. That's my goal, 3,600 area. And I think you got to start, as you get down to this level, maybe 3,700, maybe 38. There's going to be stocks that are starting to hold up. You're not going to have some stocks might be starting to hold up now. Stocks like Spotify here, which have been consolidating here the last 4 days, 5 days. This, market's been selling off pretty hard. Go back to what I was just showing you here. Look at this big down day. For the last, we went from 4,100 down to 3,900. Right? 200 points down on the S&P. 200 point down moves on the S&P. But what do we do on the Spotify here? Basically nothing. Sideways consolidation. So when we have this, it's called relative strength, and this actually looks pretty good. I mean, we're definitely off the highs, right? 380 down to 100. I mean, this is typical of the market, what the market is. We're all back down to the lows. The earnings weren't that bad on this. It's just, it's being dragged down with the rest of the market. But I'm starting to like some of these stocks down here. So even if we get down there, some of these might already start moving up. So certain stocks we want to start gradually getting in. Normally when we take positions, or you might take position, maybe you take a quarter position, and then you move in a little bit more in case, you scale in as it moves down. Well, in this case, break that down. Maybe, get in 10%, a 10% position in this, or just a few shares. If it's, I don't know, everyone's different in trading, but, you could pick up 10 shares here of Spotify down here. And if it moves down to 90, you pick up another 10 shares. You're going to have a great entry down here soon. You will. Same thing with, other great companies that have just gotten smoked. The snowflake down here, like the snowflake. This was a darling of the Wall Street. $400 back down to $140. I mean, that is basically a 70% pullback. 70%, 67, 68% pullback from the highs. Underneath the IPO levels, underneath the previous low levels, underneath every level. We're down here, and then the market sold off the last couple of days. This is starting to buck the trend. We also have a retracement trend line. We held it here, kind of chopped around, held it here, and now we held it here. So something like Snowflake, $140 looks great here. Absolutely looks good. Another candidate of starting to scale in small scaling. You're not going to go wrong here. As long as you don't put yourself into a position where you're going to get taken out of your position. Small, but some of these stocks need to be looked at, and you got to start working these. Let's go back to the S&P and just finish our analysis of that level. So again, looking for a further move down. I would really start to get active in this market, probably between 38 and 3,700. At that point, that brings us through the correction. It brings us close to that 25% correction area. All bets are off, when we do talk about any type of news that comes out that could affect us even more. I don't know what the world has. The world has gone bonkers, so I wouldn't be surprised if aliens came or, well, you know what? We did have that. Actually, we did have that last week at Congress. They were showing us aliens on TV. So that's check off that box. Aliens hit the market. I forgot about that one. All right, so I think that wraps up the S&P 500. Let's just talk about, what we've been doing intraday is actually trying to profit from intraday moves in this market, which is perfect for traders, short-term. And if you haven't gotten involved in the short-term trading with the futures with us, definitely consider it, or at least, continue to watch, paper trade it, do what you have to do to, start to learn about it, because the opportunities are there. I could tell you times, and I know a lot of people on the site, in the chat room, we have a lot of experienced traders. Remember when this market, you wouldn't get a range, you'd get 2-3 point ranges. These candles would be, sometimes it would be an hour before the market moved 5 points. Right now, the market's moving on average 10 to 15 points in a 1 minute, well, I wouldn't say a 1 minute time frame, but a 10-minute time frame or 5-minute time frame. You could easily see 10, 15 points fast in this market in a matter of minutes. That's huge opportunities if you know how to take advantage of that. And with the MES, the micro contracts, or any of the other micros, it makes it kind of easy because you can scale in, even if you're a little, you don't have to get totally run over. So let's take a fast look at that right now. All right, so for this week, I've been pretty concentrated. I did a little shorts too. I've taken 14 trades. I've been pretty disciplined on it, and I've been really stressing taking profits on the first rotation. Now, if you're new, getting the watch list for the first time, and you're hearing some of the comments or some of the terminology you might not be familiar with, what type of rotations, what's the entry levels, well, it's a learning curve. Hopefully I catch you up to speed, because this is a really good way of trading, as you could see. Actually, we just had there was a nice little divergence here. I just noticed it right here. See that? That is, there's always an opportunity in this market, which is great. I just wish we had all the time in the world. We didn't have to sleep, eat, or other things, because here's a nice move here from 38.80 and change up to 38.90, no, 3900. That's a nice 20-point move right there. Wow, it's pretty close. That was a nice move. What the hell here? Is that right? 85, 95, that's a 10. Yeah, about 10. All right, well, anyway, it would have gave us plenty of profit. So let me zoom out here. I didn't do anything here after hours. And we get to the after hours, we'll talk about, and there is opportunities after hours too. There's definitely opportunities after hours. I got to get rid of my my thing here. All right, so actually right now, 2100, 9 o'clock, just about 9 o'clock. Look at this. We actually have a little candlestick divergence there, but no position. So today, not a bad day. $178, just trading a few trades on the MES. Maximum amount of shares, 2 contracts, MES. That's $100 worth of margin there. So bought, sold. That was at the end of the day. I was a little nervous on that. It was real choppy at the end of the day, and I just was trying to time a breakout here, trying to get this, but it just was very choppy. But I was very cautious on that. But the key here was, and if we go back and take a look at the trades, and I did miss a couple. This was a nice divergence back here at 1050. We had a nice little trade here, and one candle popped up. But the big trade came this morning where the market actually took off, and we shorted and had a nice pullback and covered. And I covered on that kind of a divergence bottom, and it was also a tradeometer signal here. So once the tradeometer said buy signal, I said, you know what? I took one off, and then the tradeometer came off, and I took the other one off. And good thing I did, because the market ran up pretty fast. And that was it. But overall, the whole week, we go back. It was a short here pre-market. That was good. Broke down. We bought that, and then the overnight, I didn't trade anything overnight. But the day before, the same thing. The concept here is to trade the divergences, and the divergences are going to show up on the 1 minute time frame. I've been putting out videos consistently over the last couple of weeks talking about the strategy and how to identify those and how to get in. And I think the important part in this environment right now, because it's so choppy, is to take your profits faster. And when I talk about taking your profits faster, using that 9-3 rotation here to take profits when it breaks back above 80. So you get your divergence entry. If I could go back to a trade here. Let me see. Hold on. Let me do a faster way of finding that for you. All right. Here's one. 2 contracts. There was a little divergence here. It ran up. I ended up taking off as it approached the 80. Normally I want to wait to 80, but on my MedVed traders, it probably was above 80. So we want to get our entry in. We want to watch that rotation. We want to get out, and that just keeps us out of trouble, because most of the time, especially in this bearish environment, you want to be selling into, like I said, you always want to be buying when the stochastics are rotating higher, and you want to be selling as you get overbought. And the same thing opposite, if you want to short when the stochastics are rotating down. So really important. Look at this. This is a little divergence here, a low and a low, a higher low here, and took that entry, and look how fast this thing rotated up. So right when it got up there, I said, all right, I'm going to take it out. I'm going to take it off. Maybe I don't get as much as I expect, but it saves me a lot of grief. That would have came back down. I would have been freaking out. I probably would have got out of it. So that was an overnight. That was actually an evening trade. Same thing. That was a fast move. Some of these were real fast, little pops, and I've been taking profits really, really fast. So here was a nice divergence here, 14.3 divergence between this low and this low. I got a little late start on it, and but I got in, and then it popped, and I just wanted to get out real fast, because I said, you know what, I'm over the 80 line. I got to be careful. I don't want to continue to move higher. So I did leave a little on the table, but as you can see, I didn't really give anything back too much here, which is really nice. I have to go all the way back. I'm not going to rotate all the way back here. Well, we'll see what it is. Let's see what happens right here, because we were just talking about a divergence here. Right here, and it's kind of holding up. I'm not in no position right now, but that was the key, and we got to continue to do that short term as the market kind of gives us this opportunity to trade this style. When when we have opportunities in stocks like the ones we were talking about, like the snowflakes, or maybe even something like, and I know people are going to cringe when I tell them that Boeing down here with all that negative is starting to look appetizing, even though a lot of people are looking at that $100 mark. I'm not extremely bullish on Boeing, but I am interested in it down here. And the Airbnb kind of got hit. It came down to the lower trend line, big reversal today. So some other ones. But again, I'd probably be a little bit more cautious on taking anything other than small shares on stocks that are quality names, good earnings, good guidance, but are getting hit in the market just because they're in the market and everything's getting hit. So options expiration tomorrow. I want to send this out on its way. There's not much else I want to buy. Again, I'm going to be back on Tuesday. Charlie's going to be on the markets tomorrow, so I want you to give him some good support, and I will see you guys Tuesday. And next, if we get closer down, I'm going to have a more, a better stock watch list for you. There's nothing really that I want to like bang the table on. I did pick up some Costco before earnings on the drop yesterday. It moved down a little bit today, but again, just picked up, what did I pick up? 10, 15 shares, not much. And again, that's what you need to do. Just like 10 shares here, 10 shares there. On quality names. This one, you see what happened to Walmart. You see what happened to Target. Now, when you see, look at this Walmart. Oh, Walmart back down to $119 from $160. I mean, these things have been destroyed. Target, TGT. Usually, look at Target down here. Look at the gap down. This is incredible. Incredible moves. So usually there's one that stands out, Like all these stocks are doing bad. All these retail stocks are doing bad. And then you have one laggard, and Costco hasn't come out with the earnings. Gives them enough time to cook their books and say, you know what? What if they come out and Costco says, oh, we have a different model. We have a subscription-based model, and people are taking advantage of that, and we're going to do real good. And this thing pops up to back up to 460. I think there's a shot of that. So I kind of like the odds of buying Costco on a pullback before earnings. I really do it. Maybe I'm wrong, but it's very small shares. I wouldn't put myself in front of this too much, but I think there's an opportunity. I believe earnings come out on the 26th of May. So next week, we'll be looking to trade that one next week, Costco. And opportunities like that. There was the Palo Alto Networks today, PANW, came out with earnings. It's kind of popped. You take a look at the after hour stock here, 435. So there could be, when the market will go after good stocks, and if the stock comes out with good earnings, a company comes out with good earnings, and they're going to get rewarded just like they're going to get punished. Stock comes out with bad earnings or bad guidance. So a little risky in the Costco. I didn't take the Palo Alto Networks, but that's a nice pop there. So, all right, I'm also watching the net down here, NET. Next week, I'll probably start getting back into this one, which is nice down here. I mean, this is $58. I love it under 60. Love it. I didn't take advantage of it today. I kind of want to call this a double bottom with a little slight divergence here. So, all right, I'll take that. All right. So looking at this one also, the net, NET. And for the members out there, if you want to get those tools, you want to use those tools, you want to get the RockBot, you want to upgrade your memberships to lifetime, you get the School of Stock, you're going to get some special stuff. We appreciate those members that help out the site and help us pay for keep this thing running 24/7 and broadcasting each day since 2007. If you're not a member, please become a member and support the site. If you're a trial member, please do that. You'll definitely make your money back. All right. And that's it. I want to call it a night. I want to see everyone Tuesday, and have a great weekend. And I'll see you guys then.